time, think it's my year.
Good morning, good morning, good morning. Happy Monday, everybody. Welcome to the morning show here on Stock Market TV. I am Spencer Israel, joined by Steve Strazza. JC Parets may be joining us today. Maybe not. Maybe by phone. But for now, I think he's still on the road. Regardless, it is the first day of the month, first day of the quarter. A lot to discuss today. We're going to talk about how we're setting up here into the last quarter of the year. I got some things on my radar as well. So, on the news front, we got some monthly charts for you. And our guest today is Brian Shannon. You know him. He's the connoisseur of VWAP. He's from Alphatrends. He'll be on in about 20 or so minutes. So big day today on that front. Good morning, chat. Good morning, Curtis. Good morning, Dan. Good morning, Joe. What's up? Hope you all had a great weekend, but it's time to go. Let's roll. What's up, Steve?
How's it going, buddy?
How's your weekend?
It was good. Not as good as yours, it sounds, though.
My weekend was okay. I had a bit of a lazy, unproductive Saturday. I can't tell you how long it took me on Saturday. I was trying to do some stuff with my phone, my phone and my music. I might be the only person alive that doesn't pay for like a music streaming service. I have all my songs and stuff stored locally.
You pirated all your music years ago, so you don't need to do that.
Exactly. And just transferring from one computer, it was such a pain in the ass, man. I can't even begin to tell you. But yeah, yesterday I went for a nice walk over the Brooklyn Bridge. Beautiful day in the city. And it was a good day.
You can walk in the city, or do you have to take a kayak?
Yeah, I crossed two bridges yesterday 2 times. So one bridge by bus, one bridge by feet.
No,
foot.
Saying the city was flooded.
Oh no! It was fine. It was like it never happened. It was all good. Although I was curious what it was like downtown on whatever day it was when we got all that rain.
It's crazy because sometimes like you see the Instagrams and the TikToks and you don't know if it's real or not. But my brother
looked pretty bad to me, but it was all good. Yesterday was like 75 degrees out. It was beautiful. All right, should we get to state of the markets? Should we talk about some charts?
What are we going to talk about here?
I
know what you want.
We could talk about SBF on 60 Minutes last night, or we could talk about charts.
Why don't you tell me what happened there? Because I'm interested.
Okay. Michael Lewis's new book, what's it called? Going Infinite or whatever, is out tomorrow. He had pretty, from what it sounds like, pretty unfettered access to Sam Bankman-Fried prior, during, and after the FTX blow up last year, which is already almost a year ago, if you can believe it. It happened in November of last year, all that stuff. Anyway, so he was on to promote his book and blah, 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 but pretty good, some pretty interesting nuggets in there. Obviously, like we all know the story by now. We know what happened, but
what's new?
What's new? Well, let's see. Sam Bankman-Fried investigated how much money it would take to pay Donald Trump not to run for re-election. And the answer he got was $5 billion. But he's not sure if that came from Trump himself or someone close to Trump or whatever. But he also wasn't sure if it was legal, and then he ran out of money before he could even attempt to do it. So it never happened. But
it seems like this company was like destined to blow up and lose all of its money eventually.
Yeah.
Theories about how some of this money was spent.
I think that's half the fun. Is the guy just clearly was a child running a company and just gave money to everybody, like willy-nilly. And I think that was Michael Lewis's like big takeaway was if you take a person who's like pretty socially awkward and give him unlimited money, who, and he's willing to give it away, who comes running? And the answer was everybody. Everybody
Right.
tries to get on the gravy train. It was interesting. I don't know if I need to read the book, but there were some fun little nuggets in there. Um, Michael Lewis was asked what he thinks Sam Bankman-Fried's like biggest fear is, and he said losing access to the internet. Not being in prison, it's being in prison without the internet. He thinks that if he had access to the internet in prison, he could live there forever. So I don't know. He's a weird guy. Michael Lewis, I think, is a great author. I haven't read all of his books, but I've read most of them. And
Can't read them all. There's too many. He writes too many books. He's one of those guys.
I haven't read his last few, but anyway,
Flash Boys was good. Flash Boys was really good.
I started. I started that one. I have it on my shelf, and I got to go back to that. Okay, should we do some state of the markets? Let's get some charts up. Let's go. What do we got here?
All right. All right, we'll do it for you. Throw up 3.
I love slides 3 and 4. We just lost our slide deck. Let's get it back. I love me a good. I call them asset quilts. I don't know what you call them or what everyone else calls them.
Return matrix. We're not
okay.
Here.
A return matrix, whatever. Asset quilt, return matrix. I love this stuff because I'm a visual person and I like pretty colors, right?
Everything we do here is visual. This is just a different way to visualize the same data that we present in front of you and everybody else on a daily basis.
That's true. That's correct.
Different way to do it. So what do you like so much about this? Tell me, the colors speak to you?
No,
or the sectors, like, is there a takeaway, or you're just like...
I mean, it's not any better or worse than looking at a line chart of every sector. It's the same, like I said, it's the same information. I just like how it's visually displayed, and this is fun for me to look at. So I enjoy it.
So the big takeaway here is look at the beta, right? The juice will rise to the top. This is no special situation. If you go back to 2020, right, it's either energy or tech on top. See that?
If you go back to 2020, it's either energy
or the top performing.
Yeah. Holy crap, you're right. Almost.
Now, is that a unique situation? Is kind of what I'm saying.
Well, unique for the last 13 or so years? Yeah.
No, it's not. It's the beta trade.
Well, I guess you're right, because in the last, it's been all tech, no energy, but prior to that it was all energy, no tech. So yeah, okay. All right. Yeah, you're right.
Typically in bear markets, you might get like a utilities or real estate sector rising to the top, right? But this one was a little different, where energy kind of kept working through the bear, right? So energy kind of stayed on top in 2022. But then before then, it's tech, because in the bull market, tech is usually working the best or the fastest, right? Has the most beta. So it's outperforming, which we see all the time. And then there are other times, if it's more of a cyclical bull market, where energy will offer that juice, like in 2020, 2021. Tech was red hot. You look at the first two columns, right? Energy beat it in Q4 20 and 2021. So that's an interesting kind of takeaway from that one. If you look at the asset class returns on the next matrix. Okay, so where have we come from, right? So if you look at Q4 of last year, market bottomed in Q3, right, Spencer? Most things in October.
Yes, most things. Most stocks.
September, October. NASDAQ held out until December, actually. But who kicked off the bull market last year?
Oh, I mean, I can look at this and get the answer, but I don't know if I remember. I have a short-term memory for these things. So who kicked off the bull market last year?
Yeah, who was the best performer in Q4 last year?
Yeah, emerging. Ooh, global, international.
And we forget that, right?
Everything that wasn't us.
Yeah. So there was a moment in time, it only lasted maybe a quarter and a half, where it was like, ooh, developed Europe, the Dow. Remember how the Dow really kicked off the new bull market, was outperforming the NASDAQ like crazy late last year?
I remember all the European banks looking amazing all of a sudden.
Europe was doing well, like Germany, UK, right? Italy, Greece, all these countries were performing really, really well. Okay, so we talk about how maybe breadth hasn't been super supportive, right? That was a big theme from Chart Summit last week, how this is a weak internals market, right? But if I went back to the beginning of the bull, we did experience some very constructive rotation, right? It wasn't just the US, it wasn't just tech. A lot of different things were working, like all the sectors were green up until like July of this year, right? Overseas, everything was kind of working. We've lost that. Europe probably rolled earlier than the US, maybe late spring, early summer. US rolled in July. Small caps never really got it together. Now we're at a point here in Q3, almost a year in to the bull since stocks bottomed. And are we passing the baton to commodities? Seems to be the question, right? We got energy leading the sector matrix. We got commodities leading the asset class matrix. We've heard a lot about tech, AI all year, right? Nobody's talking about oil and gas. Nobody's talking about energy. Nobody's talking about the current leaders. I think that's important. But from a more macro perspective, any of these leaders, right? So we got IFA, and I'm starting on the Q4 2022 column for a reason. That's what I'm focusing on, because I'm focusing on who has led this bull market cycle. We got IFA kicking it off, then the large caps, right? We don't have NASDAQ on here. Otherwise, they would have been on top in Q2, obviously. And now commodities or energy. Next chart. All of these groups, even commodities, are facing overhead supply. So here's your current leader. Energy. We could show you crude oil that still has some overhead supply to get through those big bases that we were talking about last week. Here's equal weight energy, RSPG, and then equal weight energy relative to equal weight S&P 500. When energy finally resolves, right, XLE will look like this RSPG chart. It already looks exactly like it. One's equal weight large caps, the other one's cap weighted large caps. When these ranges resolve in XLE and RSPG, we will get confirmation from the relative trend. Go back to the sector return matrix really quick so I can just make this point as clear as day. If energy, back to the sector return matrix, please. If energy is going to break out and start trending higher in absolute terms, you better believe it's going to
go back one more. There you go.
You better believe it's going to outperform, right? Look, it was the top sector over and over and over again over the past few years. It will be a leader again if it starts trending higher, right? So now go back to the dual pane chart, or the overlay chart rather. So this is just an easy way to say, okay, we have confirmation for this breakout. We're always looking for confirmation, right? We get failed moves all the time. So if and when this range resolves in RSPG and XLE, do yourself a favor, punch in the relative trend. This is RSPG versus RSP. That needs to break out. That leadership needs to be there. Am I making this point enough, Spencer? Right?
Yeah.
So it's not going to be enough to just get energy to break out on an absolute basis. You want to see them break out in relative terms too. This chart is going to give you confirmation for that. And then you're going to see them back on the top of that sector class or sector return matrix, right? Now,
or in this case, remaining on top.
Yeah, that's right. Now there's a broader theme here about all of the leaders, right? Energy, strongest group right now, been the most resilient, still trading right up near those highs. Other groups are not, right? But still facing a significant amount of overhead supply on multiple time frames. If we zoomed out, there's shelves of resistance going all the way back to the early 2000s in these sector indexes also. These energy stocks are not alone, though. If you go to the chart of tech, same theme, right? Let's look at another leader, maybe the past leader, tech. Overhead supply, right? You've seen this chart a million times. Hey, how about developed Europe, right? The leaders who kicked off the bull market. Overhead supply. I could show you, 10 other indexes from Europe, but this one kind of makes the point, right? Shelf of resistance there. None of these groups have broken through. So that is the overriding theme for all risk assets right now. We can pick and choose. Hey, we think this will be the future leadership area. We think, these guys are going to show relative strength, but we need to see these breakouts materialize. And as we get them one at a time, those are the areas and those are the groups that we want to lean into. We think commodities will do that. But if you go back to the energy charts, we need to see these resolutions first, right? So we're kind of anticipating these trends right now, We have not gotten the green light.
You know what? I in the time you're talking, I was thinking about a better answer to your question as far as why I like. If you go back to slides 3 and 4, it's because they visualize rotation, right? This tells the story of rotation, which we talk about all the time. But sometimes it's harder to see. I mean, it's easier to see in the moment, but it's harder to remember after the fact. And this tells that story of the rotation of different sectors or different asset classes or whatever.
That's right.
And that's why I love this so much. Is it tells that story. So
yeah, we could talk about the losers too, right? There's a lot of information here. I just focused on recent leaders. You could go back. There's just wealth of information here. Hey, one hole in the chat. My mic should be better now.
Yes, it is.
That was a mic volume problem. My cat's turned down my volume.
Your cat's jumping all over the desk.
They did.
Okay, yes.
We should also address in the chat the fact that, yes, JC was embarrassed to show his face here today because of the terrible performance from Miami yesterday. Hopefully he feels better tomorrow, but we'll see. Hey, what a difference a week can make. I like Miami. They're like my secondary team. They're my backup team.
Right.
So I do like to see them win, but whew, man, smoked. Absolutely smoked. They put up 70 points one week. We're so excited. And then the Bills come and drop 50 on them. I mean, wow. Football's fun.
It's a long season. Try not to get,
How about that Ryder Cup, Spencer?
I know. So I know who won, but there was a whole bunch of drama that I didn't bother getting invested in. So maybe if you want to fill me in now, or we can do it later for recess. But I don't really know what.
Yeah, I know what you're talking about.
Yeah, like I know the Europeans won. They were winning. America came back and they almost won, but the Europe won. But then there was all this stuff happening off the course, and I have no idea what that is.
Yeah, so I was waking up at like 2 a.m.
Oh gosh,
because the opening ceremony is like a special thing, dude. The way the fans get into it, it's like an Olympic match, and that's exactly what happened. So on the 18th green, the end of the second day, Europe was just kicking the U.S.'s ass the whole time.
Right.
The final score, actually, they ended up coming back, and the U.S. had a real chance to book like the biggest comeback ever. Like the board was kind of like falling into place for them, and they just couldn't get it done. Like they were just not the better golfers. But anyway, at the end of day 2, they had like this moment where they got like a momentum surge going into the end of day 2, which they needed, right? To hopefully come out on day 3 and win all the match play, run the table, whatever. Cantlay like cans a huge putt. They get a full point on the final match of the day, and they all start going crazy, right? Like, which is fun and fine, right? So they're all pumped up, and the caddy for Cantlay, Rory still had one putt. He had to do his last putt, right, for the thing to be over. And the caddy was like wasn't in his line, but he was too close for Rory's comfort. And Rory's my favorite golfer, but I will say his mouth gets him in trouble sometimes. Like, I love him because he's open-minded. He says what's on his mind, but sometimes it's like, Rory, a little too much, right? Like, he's like the little PGA's like teacher's pet, whatever. So he kind of made comments about how it was ridiculous, like get out of my way type of thing. And the caddy gave it back to him, was like F off kind of thing. and then like Lowry, another guy like from Ireland, got into Ireland guys.
All right.
Stepping up, looking out.
It sounds fun.
Then in the parking lot after, Rory confronts the caddy and starts like yelling and cursing at him. And it got pretty lit up there. A little bit of drama, but I think it goes down to the whole like sportsmanship. You got to toe the line in golf between sportsmanship and then just being like too tight about things where it's not fun. And I think this one was a bit of a gray area. I understand both sides.
Sounds fun. All right, let's bring on today's guest, Brian Shannon from Alphatrends. He's here right now, and let's see what's on his mind.
Yeah.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Brian, good morning, sir.
Hey, good morning, Spencer.
How we doing?
It's early.
Yeah, it's early. It's early for us. It's earlier for you. We always appreciate you coming on. You were, as you know, I think you were the first ever guest on the show. So good to have you back.
I know. I was honored. Yeah, thank you.
Yep. Okay, we have some charts, I believe, for you. But broadly speaking, Brian, Where's your head at right now as we enter the last quarter of the year?
I just take it trade by trade. I listen to you guys talk about sectors and this one should lead and historically this and historically that. And none of that, means anything to my style of trading. And it's not that mine's better or yours is better. It's that there's so many different ways to the finish line. And I'm just a bottoms up stock picker. So I take it one stock at a time. Of course, the market concerns me right now. We're still in a little bit of a corrective mode trying to find its footing here. But it's, to me, it's a lot easier to do it that way. I don't have to think about gold, and I don't care about gold. I don't really. Yeah.
So explain what that means. I think that's good, right? This bottoms up, tops down thing. Not only do we have different time frames, right? You and ourselves at All Star Charts, but also it's a completely different strategy, right? You're starting at the individual stock level. Explain what bottoms up is.
Yeah, bottom up being basically I'm going through a ton of stocks on an individual basis and seeing where the strength is individually. And I tend to think that that's you get a better feel for the market that way because you're looking at the individual components. In order for the energy stocks to move, you need one or two to lead the way. And once the whole group starts to move, then it becomes apparent, but the leaders have already moved 10%. So it's to me a way to get in under the microscope and see what's really going on first and foremost. And instead of the top down, look at the US compared to the rest of the world, look at the dollar, look at this sector, and then delve into the components. I think you're going to be generally a little bit late. Doesn't mean you can't make money. And, for the shorter term time frame, early onto the trend is better because that's where, you get that building momentum and you can manage risk most effectively.
As top-down analysts, we might catch a big market turn or see market deterioration, right? Because we're monitoring internals or something like that. But we also might overthink a trade like Brian's talking about, where he could see a leader beneath the surface in energy, and he's not going to look at a chart of crude oil and be like, "Oh no, never mind. The inner market is not supporting this." Right? You're not going to go that far and then talk yourself out of a trade because of what a different chart is doing.
Well, yeah, that's true to a degree. But for instance, right now, the S&P, the NASDAQ, et cetera, we're still in a little bit of corrective mode, trying to find its footing. And there's a couple of stocks that I've been involved in on the long side. But when I see that, I think, of course, a rising tide lifts all boats, and that would be preferred for the long trades. But when I see a stock setting up and it just looks like it's got a great risk reward, my decision then turns to, okay, how do I manage risk most effectively and make sure that if the market headwinds are too strong for this stock to rally on its own merits, I'm not going to lose much, so I reduce my position size. That's the way I look at the macros. If it's not supportive, then it comes down to position sizing.
So do you need like the S&P 500 or NASDAQ to be above a rising 5-day for you to take long positions?
For me to take long positions with confidence, but now the issue with the S&P and the NASDAQ is we're below declining 50-day moving averages, and that tells me it's going to probably take a little bit longer, and that a rally that could come from here might end up failing, in fact, and heading down to that year-to-date anchored VWAP in the 200-day moving average. So it's a little iffy here for me. So I've just been really playing strong defense with smaller share size.
Throw up chart 3 for Brian. Brian, why don't you walk us through this? I went and grabbed some from your Twitter. I didn't see any with the 50-day, unfortunately, but I think you got the 5 here, which I know you pay a lot of attention to.
Right. So what I've found over the years is that 5-day moving average, for whatever reason, has been just the absolute best thing I can look at in the intermediate term. In terms of if the 5-day moving average is declining, I look at the market on the intermediate term, guilty till proven innocent. Once we start crisscrossing above and below it, which we're starting to do a little bit right now, but it's still declining, that tells me, okay, something potentially could set up for the long side. where does that fit in with the bigger picture? Well, we've been dancing on that anchored VWAP from the March low in the S&P. So I already know that this is an important level to start with. And now that battle is being fought. So I always say, I look at the anchored VWAP, a key one like the March low in the S&P 500, as a level of interest. And what that means is I don't want to just buy it because it touches it, but instead I expect there to be a battle fought in there. And right now we're seeing that battle is in fact being fought, and it's unclear who the winner is going to be so far. It's more neutral and perhaps, getting ready to move higher again, but it's not quite there yet. So once we start to see that 5-day moving average flatten out and then we see a higher high above it, that's where I want to get involved with my stop underneath the most recent relevant higher low.
Throw up chart 1. I think this is what Brian was just talking about. This is the March VWAP, right, Brian?
I don't see it yet, but most likely. Yeah. So that's actually a scenario that I outlined, that because, and I took the 50-day moving average off that one for simplicity.
That's the 200 in gray?
That the 200 is down there with that's the black one, and the thick blue line is the year-to-date anchored VWAP. If I'm looking at that correct. Yes, it is. And then I've thrown the Fibonacci in there from the 2022 low to the 2023 high. So 30
too. Yeah.
What's that?
Comes in at a key level at that shelf of old highs too.
Yeah, exactly. So we've got that prior resistance, which is shaded pink in that same area. We've got the 200-day moving average, the year-to-date anchored VWAP, and a 38.2% retracement, all coming together in that same spot. So what I had sketched in is, we're now on that anchored VWAP from the March low. And this is just a potential scenario. Sometimes I'm reluctant to share a chart like this because people think, hey, that's what's going to happen. It's going to bounce and then fail.
Well, hold on. What you're telling me here is there's a confluence of interest. So you're just going to close your eyes and buy blindly when it hits that level?
No, never. You know that. That was a setup.
So explain why. What do you mean when you say it's potential?
The opposite of what he's saying.
Yeah.
What is that? That doesn't help me.
It's an important level of interest. So for instance, right now, this anchored VWAP that we're on right now, that's one thing that is important here. I don't see 4 things like I do at that other level. So Steve, it's always about psychology of what are other participants doing. So let's say we have a group of shorts that say, hey, our target is the 200-day moving average. We're going to stop shorting, add less supply, and we're going to start to bid for and cover our short down at that 200-day moving average. Less supply, more demand. What about the big, long institution that uses that 200-day moving average saying, hey, we lightened up a little bit because it was 2 standard deviations above the 200. Now when it pulls back in, we're going to start to support our stocks and put some of that money back to work for the fourth quarter, let's say November and December, if October is rough. Well, that's one group of people. What about the people using that prior resistance saying, hey, that's potential support. I'm going to cover my short there. So over and over again, if we have different groups of participants coming to the same conclusion in the same area for different reasons, well, it just makes it potentially that much stronger. So it's a key level we want to monitor. And again, break down to that 30-minute, 15-minute time frame, whatever. Look for the evidence. Let other people do the dirty work of closing their eyes and creating the support that I'm looking for. I want to buy the momentum as it rallies away from that level rather than take the risk and just blindly guess.
Right. Throw up chart 3. Are you anchoring from the Fed day here on the left side?
This one, no. This was Friday. I had posted this chart. This is just 3 days. I do anchor from the Fed, but this is 3 days worth. And what I was trying to show, this was a little bit of a running commentary I did on Friday about the market, how it rallied right into that 2-day anchored VWAP. Somebody had said, hey, looks like a big rally's coming. I said, whoa, wait a minute. What are you talking about? We just rallied $2.30 in 30 minutes on the SPY right into the 2-day VWAP, and then it pulled back to the 3-day VWAP. So that, the point I was trying to make there is that you've got to be aware of these on all time frames. If you're a day trader, you got to be looking at that 2-day volume weighted average price. For somebody who's looking at, your time frame, it's completely irrelevant. It's noise, but it depends on, again, what your goals and your risk tolerance and, just general outlook on timing is.
And I think you even pointed out on Twitter, if you throw up chart 4, that all of this was happening. Sure, it was a nice little, couple day rally, but it was happening within the context of a declining 5-day moving average.
Yes. Yeah. So when the 5-day moving average is declining and, like you see there, we gapped up above it, I am highly suspicious of a rally attempt with a declining 5-day moving average. So when I see that happening, I'm thinking this is likely to fail. Don't get excited. And, people get excited about these things. They feel that FOMO kick in. And I mean, we had just rallied from, what was it, 422 to 430 in a period of 2 days with a declining 5-day moving average. That's not the time to be a buyer.
Right. So this 15-minute chart is reminding me of something. We have the best interns here. So we had an intern this summer. I was sharing my screen, so he saw my TC2000. I usually don't let people see my TC2000 setup. And he said, you junkie. You got 15-minute charts, 39-minute charts. Like, what are you doing? Like, right? And I was like, oh, easy, buddy. I said, this isn't even mine. I completely stole this process from Brian Shannon. That shut him right up. He said, oh, that's what Brian Shannon does? Really? Explain to me why 15 minutes? Why do I have a 39-minute chart with a 130 period moving average on it? What is the math behind this? How did we get here?
So to look at the 5-day moving average, you can't look at a daily chart because it's too it lags too much and it's not accurate until the end of the day. So if you're looking at it, an hour into the day on a daily time frame, what you're looking at is the 4-day plus 1 hour. There's 6.5 hours in a day. That's 390 minutes. 390 times 5 days is 1,950 minutes. So what we want to see when we look at a 5-day moving average is 1,950 minutes. So on a 15-minute time frame, as you said, that's the 130 period. 15 times 130 is 1,950. If I look at a 30-minute time frame, I'm looking at 65 periods because 30 times 65 is 1,950. That's one of the questions. The other one was why this wacky 39 minutes, 65 minutes, 78, etc. Well, again, there's 6.5 hours in a day. That's 390 minutes. If I look at an hourly chart, that first candle of the day, 9:30 to 10, is only 30 minutes long. Then we see the 10 to 11, 11 to 12, etc. So we've got 7 candles for but one of them is a half hour, 6 of them is 1 hour. So to compensate, we use a 65-minute time frame because 65 times 60 is 390. So as long as it's divisible, divided, you can divide it into 390, 78, that's 5 periods per day. So 130 is 3 per day. 195 is 2 equal candles per day.
Unequal candles will also mess up the VWAP calculation. No,
they'll mess up everything. They'll mess up your RSI. They'll mess up your MACD. You're giving, too much weight to one time period unintentionally, and it's just a flawed way of doing it. If we're going to compare data, we have to compare equal data.
Absolutely. So don't use the 60, which is a stock time frame on most charting platforms.
Right.
You can use the 65 instead. You get 6 equal 65-minute periods a day.
You got it.
Question in the chat. Let's go to the chat. Everybody's got questions for you, Brian. Is there a moving average that goes well for each holding time? You mentioned a 2-day for day trading and a 5-day moving average. How many moving averages are on your charts? Which ones do you really lean into and use the most? I know you already mentioned the 5-day.
Yeah, the 5 days for me, for my time frame, most important. I think on a daily time frame, what I have is I have a 20 and a 50. And the 200. On my weekly, I have, the 10, 20, 30, 40, which is 50, 100, 150, and 200. Those are really the only ones I really look at. And on the daily time frame, I think that for most people, the most important one will generally be the 50 and the 200. The 50, don't trade against the direction of the 50-day moving average when it's declining. Don't be looking for that long setup unless you're, swing trading it. So you've got time to be a buyer with a declining 50-day moving average. On the longer term time frame, the 200-day moving average, we just saw a great example over the last year of when we have a declining 200-day moving average. Don't expect those rallies to hold. We see it in all the pot stocks. Everyone got excited about those. They had 200% rallies, but they were just destined to fail because they're still in longer-term downtrends. Nothing wrong with trading those, but they're still in longer-term downtrends.
So you're using the 200-day more so to tell you what kind of environment am I in, and how aggressive should I be on the long side?
Yeah, can I trust this for a longer term trend to develop? And not necessarily that I'm going to trade that longer term trend, but it starts to give me an idea of, okay, maybe there's real forces at work here that are going to sustain this trend. Therefore, I look at this stock and say it's more likely to continue than to fail here. So this one kind of gets a little bit of extra weighting in my analysis when I look at it. I think, well, this one's probably turned the corner and can sustain rallies.
Yeah. One more question from the chat. I think I know the answer to this one. How does Brian deal with this market where there is a weak market breadth, is what they're saying? The Magnificent Seven has been moving the market, but others within the same field haven't really followed. Do you care?
I don't care. It's each stock on its own merits. And again, like I said, I want to be aware of what the market's doing. I mean, I talk about it all the time. I'm always posting videos and charts and all that stuff.
Every
about
Friday. Free Brian Shannon video on the Twitter every Friday, people.
Every Friday. So, of course, I'm aware of that. I mean, I was just talking about Apple and how it failed at the March anchor and came down to the 200-day moving average. We're pretty damn close to it. And I'm aware of those, and sometimes I'll trade them on a short-term basis, but I'm not so interested in the market itself as I am the components and the individual trades where I see those setups develop.
You're analyzing market breadth without meaning to, right? Because the first thing you said on here was, I just look at as many individual stock charts as I can, right? And you look at so many that you have a good gauge for market breadth, right?
No, you're absolutely right, and that's a great way to put it.
Oh, reversal pattern, new highs. Things are improving beneath the surface, right? And that tells you something about the environment you're operating in. Maybe you could push the gas a little more.
Perfect. Well said.
Talk to me about Bitcoin. These guys on Twitter.
I'm going to ask about that.
Yeah, throw up, what is it, 5 here? The guys on Twitter, Brian, are telling me that I can't use a VWAP on Bitcoin. Can you set the record straight?
Here's the thing, it's tricky. And the reason that they're probably saying that is because there's no central volume. It's fragmented liquidity. And that is 100% true. So if you use data from Coinbase versus Bitstamp and you put the same anchors in the same spot, you're going to see different things. That's just the way it goes. So the way I do it is I'll either look at what is what seems to be the most liquid exchange, or for me, the way I'll do it is the market is me centric. So I trade crypto at Gemini. So I'm interested in my pool of liquidity. My pool of liquidity is that at Gemini. I don't really care what's going on at Coinbase because I'm not competing with those customers. Wow. At the end of the day, you kind of are, because the ARBs will bring them close together. But I want to know my pool of liquidity, and if I can find value using an anchored VWAP in that area, it'll tell me the key levels to be aware of. It's not necessarily that it's going to act perfectly, but often they do. Right. So I take it with a little bit of a grain of salt because of that.
It goes back to, I think, your comments on it's a potential level of interest. Mm-hmm. But you need to see the market react there to confirm that, right?
Yes. Yep.
Somebody's in the chat is saying, because I've always said, why can't they just take all the volume from every exchange, aggregate it for us? Like, how has this not been done yet? Somebody's saying you can use the Bitcoin index. I don't know how true that is. We'll look into that, because that would be nice, right? Ideally, that would be the answer.
Absolutely. It seems, like you said, it's common sense. Why hasn't it been done?
Sam Bankman-Fried, he was putting out all these great indexes for us. We had all these FTX indexes, and then they just disappeared. We lost all of our data. Got to make our own. All right, so break down the price action. How do you see Bitcoin right now? Because it's kind of stuck at this kind of key level between 25 and 30. There's a lot of price memory here. How do you see this trend right now?
I think for shorter term, you can trade it. I don't see anything big developing, but 25 is, like you said, pretty key. As long as we're above that, it's constructive is the best way I could look at it. But, short term, we've had a great rally the last 2 days. So if you're involved in that, then you're loving it. If you're still holding it from 2022, then maybe not so much.
It seems like you said, as though there's a pretty constructive base in place as long as we hold 25, right? How long it takes to get that next leg higher, we don't know, but I'll throw up a chart that kind of shows the base and that level that Brian's talking about at 25 here. So
I think Brian just summed up everything ever. It all depends on your cost basis. How you feel depends on where you bought it. That's it.
Well, it is, and
Right?
and that's the most important price. I know JC often says the closing price is the most important. I think it's the least important because you can't do business there. It doesn't, it's the market's closed. What are you going to do? You look at it and cry or celebrate? But what the most important price is your price. What does it mean to you? So that's am I winning or losing? That's the most important price.
And isn't that? I feel like that's part of the reason why VWAP spoke to you so much in your career, because doesn't it just give you a really good measure of what the average buyer, average market participant has paid, what they're in?
Yeah. On stocks and centralized liquidity products, it tells you really, as I like to say, with 100% certainty, who's in control, the buyers or sellers from that point where you measure. Then the trick is, are you measuring from something that other people think is important? I've had people say, hey, Brian, I bought this, I bought Bitcoin at 18,345. So I put a VWAP there. I was like, well, you're the only one who cares about that VWAP. It really doesn't mean anything to anyone other than you. So, rethink that one maybe.
It's true.
So where are the big anchor points? If you throw back up Brian's Bitcoin chart, explain to us why, because I see this first green VWAP that you dropped right after, I think, a pretty big event in the crypto space. Was that not the FTX blow up last fall?
I don't remember if that was, but that was the low for 2022. Yep. So important levels are lows. That purple one is the year to date anchored VWAP. The red one is from that most recent high. The black one is from the all-time high. Yep. So these are just important highs and lows basically here. So that gives us an indication of, from the absolute peak, in the year plus that's traded since then, the average long is positioned at about, what is that? I can't even tell. You can't see it from here. That black one at about 29, let's call it. So the average long is still down a little bit, but they're starting to feel better. The average short is feeling like, maybe I'm overstaying my welcome in here. Right. So it gives us that opportunity to say, here's how the average person is positioned. Now, when you saw that rally that was 2 months back into June, and it got through that, well, it's a level of interest. It doesn't mean that it doesn't mean the buyers have taken control and going to maintain control. It's just a place to measure from. And again, I agree with the person who asked the question that it's not always going to be as valuable in something like Bitcoin because of that liquidity issue.
Another weird one. We got time for one more, Spencer?
Yeah, we'll do one more.
The dollar index. It's another thing you wouldn't expect people to be dropping VWAPs all over. But
yeah.
Right? So
I'm not sure why it's relevant, but I don't, so to me, the dollar is the only.
Oh, and there we go. Wait, no, he's back. He's back.
Okay.
He's here. Yeah.
The dollar is the only currency I care about. That's what I pull my wallet. That's what I've got in my wallet. That's my credit card transactions occur on that, whether I'm here or somewhere else in the world. So yeah, I don't know. All I know is that is a level of interest to me. We've been up, I think, 10 weeks in a row. So we say, where have we come from? Is it likely we're going to continue to rally another 11, 12, 13 weeks? Possibly. Here's what I know, though, is that the average that it's traded from that peak is right here. That's got price memory, and it's a level of interest that might end up being useful. Perhaps it just rallies right through it. I don't know, but the previous ones have been important. So it's worth taking a look at and saying, let's see how it responds in here. This is a potentially important area.
But what Brian has done here, just to be clear, before the chat gets going, this is not Dixie, the dollar index. He's looking at dollar index futures, which do have volume. That's why the VWAP works on it.
Right.
All right.
All right,
This was
Brian
awesome.
Shannon.
Thanks for getting up early for us, man.
We appreciate
As
it.
always.
I'm usually up at this time, but it's just I'm not sure I'm camera ready.
No, you look good, man.
Neither are we, Brian. It's okay. Have a good one.
Thanks.
All right,
bud.
thanks, guys. Take care.
Later.
All right. Always great stuff. You guys know where to find him at Alphatrends on Twitter, alphatrends.com. Links are in the description.
If you can't find Brian Shannon on the internet, I don't know what you're doing.
Or read his books. Don't even go to the internet. Just read his books, plural now. All right. Let's bring on Kimmy. She had another active day on Friday, and let's see what she's watching this morning. Kimmy,
Hi,
what's up? What's doing? How we doing this morning?
it's Monday. Market's back. Listen, futures were up last night. I think they were happy because of, I think the government shutdown. There was no government shutdown. They came to a deal, and then that was squash, meaning the futures just reversed.
I'm so happy we spent 0 seconds talking about that last week because A, who cares? And B, it didn't even affect things anyway. So
No, well, futures were up pretty good last night,
okay,
and I kind of was like,
right.
let's see what happens by the morning. And obviously, this morning, they're back down. They're down. So, like I said, October could be a little bumpy for the next few weeks. You know, I was looking at Tesla, but Tesla, I think, had deliveries or something this morning. So it's back down. So, you know, I keep from when I write my notes 7 in the morning to 9, things change. So I'm always looking at different stuff.
Yep.
Not a whole lot. I have to see the way this market reacts. I mean, it looks like it wants to head lower. You know, I just say to everybody, just be careful during this time. It's not the greatest trading time.
Well, you went 4 for 5, I believe, on Friday. But hold on. On the thing about the futures, are you like at your computer at like 6:30 on a Sunday night, just like checking?
No. I'm not at my computer.
Okay.
I'm on my phone. Look at the futures.
Okay.
I'm not that dweeby.
Okay. Hey, no judgment here. Some people are into that.
But I am watching the futures from my phone.
It's totally fine.
So I guess I am a little, you know.
Anyway, all right. Let's see. Friday, you bought FedEx for a profit. You shorted Lulu for a profit. Valero, you got revenge for the other day for a profit. ExxonMobil as well, and then you booked a loss in Adobe. The Adobe, was that a swing trade or was that just a day trade?
No, it's day. I bought it late. I was actually, I don't know what it was, but I was like slow entering everything on Friday. Maybe it was Friday. I was, you know, like ExxonMobil, I want to enter in higher. I did a pop, so I was able to like add to the short. But it was, I was slow to enter everything, and I entered Adobe at the wrong point, and it just reversed. Well, the market reversed. You know, the market was up in the morning and reversed. I did buy the IWMs. I still have them. I'm down in them. I'm going to watch to see. That's really my only long on the indices. So that doesn't mean it can't go all the way back down to 171. I'm just going to watch in here over the next few days.
So you had a couple winners, Valero and Exxon. When you've got two trades that have worked for you, that are in the same, two stocks that are in the same industry group, will you just look for others in that group?
Sometimes I will, but I have a tendency to lean towards Valero more often. ExxonMobil, I did that trade because it looked weaker, and also I was looking for a gap filled down to 116.73, and it did hit that by the afternoon. So I was filled in the afternoon after I left. So that was a nice little Friday low.
And then question from Dan in the chat that I think I know the answer to. Does Kimmy use the Bollinger Bands as target prices to exit?
Yeah, I use it. I use Bollinger Bands as support and resistance a lot of times. I use the 8-day moving average, the 21-day, 50, and 200. So just I use those as well. So I use those 4 moving averages as well as Bollinger Bands. I do.
All right, if you want to get Kimmy's trades in real time, every day she leaves us here and she goes over to her trading room where she live trades through the open and through the morning, calls out her trades as she makes them. Winners frequently, shall we say, frequently winners that she's calling out in the moment. You can get them not like the day after like we do on this show, but actually in the moment. Check it out. The link is in the description. I'll put it on the screen. Kimmy,
Bye,
have a good
guys.
one.
Have a good one.
All right.
You're welcome, Dan. Bye.
All right. The link again to that is in the description, and let's drop it on the screen real fast. We'll do it in the form of QR code. How about that? There's the QR code, and then again, if you just click on more in the YouTube description, it'll take you to her the link to sign up and free trial as always for everything. And seriously, if you're looking for like idea generation, if you're feeling isolated during the day, trading by yourself, and Kimmy's room and other people that are in the room are there dropping ideas, all morning long. And she's extremely active in the first hour or so of the day. It's most of her trades in the first hour. I think like 80% of her trades in the first hour of the day. So check it out there. Okay. Let's do some Strazza come back in a second. Let's do maybe we got a lot of news this morning. Maybe because it's like new month and new quarter. So Kimmy mentioned deliveries on Tesla. We got that number, I think, while Brian was on the show. So I think Tesla's down about, 3% last I checked. It's bounced a little bit. Their deliveries for the quarter, they reported 435,000 Teslas were delivered to customers last quarter versus an estimate of 456,000. So, bit of a miss on that. Although, whether you believe their reasoning or not, I don't know. I guess it's up to you. But the statement said that the reason their deliveries were lower was because of planned outages at their factories due to upgrades they were making. So they did reaffirm their delivery target for the whole year of 1.8 million. So whether it's up to you. Do you believe the spin or not? I don't know, but regardless, their delivery numbers did come in light on the Q3 front. We also had deliveries from Rivian this morning. This is interesting because I'll give you the number on this one first. Rivian, you okay? You good? Okay. I'm also a bit. I don't know if you can tell, I'm a bit stuffy this morning.
Yeah.
Rivian delivered, or they produced 16,000 cars last quarter versus an estimate of I'm sorry, they produced 16,000 and they delivered 15,500. But there was a good article in the journal this morning about Rivian, basically on the economics of this company. So their cars, which I've seen, they're actually really nice. They sell for about 80 grand on average. Rivian cars are so expensive to build that they lose about $33,000 for every car that they sell.
Yeah. I've heard this a couple times now. So is it subsidies? What's keeping them alive?
Great question.
Right.
Probably
Do it. They have the capital.
They have the capital. After the SPAC, and I'm sure they've raised money since then. They haven't, unlike some of their peers, they haven't burned through all their money yet. So
It's the
good
problem.
for them.
We talked about it last week with the solar companies. It's the same issue with these EV companies. I don't like a business that isn't viable without government help, right?
I'm sure that's part of the equation. It has to be.
Even with Tesla, you know how much help Tesla's had over the years?
Oh yeah.
And that's tough, I think, for investors to wrap their head around, right? Because what happens if and when that government support is pulled? We saw that with the solar companies in a way, right? When those subsidies came down, that help kind of came off the table.
Yep.
Companies couldn't stand alone. So
that's it.
We'll see. How about VinFast? Are they selling cars yet?
Actually, Fonz and I were talking about VinFast last week. I hadn't looked at it for a little while. I looked at the chart, I think, on Thursday briefly.
There's support at 0.
Yeah, there's always support at 0.
Yeah.
So that was funny. Hey, we got some other stuff going on this morning. A lot of like spin-offs this morning. Maybe it's, again because it's the change in the quarter.
Let's talk about them.
Kellogg's is not going to be the Kellogg's that we're used to anymore.
Why?
I didn't even know this was happening until this morning. I guess it was announced previously. But Kellogg just completed a spin-off today where the cereal business is going to be under a new company called WK Kellogg. Okay. And that's going to trade that's going to and that company will trade under the ticker KLG. So cereal is KLG. If you want the snacks and stuff and the Cheez-Its and the Pop-Tarts and the Pringles and all that and Eggo and all the other crap, that's going to be under a new a different company called Kellanova, and that will be under ticker K.
All
So
right.
there's K and there's KLG. And
You may not know the answer to this question, but all I want, when there's a spin-off, traditionally, it is because one segment of the business is
doing well, and one is not.
and other segments are weak. So am I hearing that cereal is like who's the strong one that got spun off here? Is it the cereal or the crap?
I don't know, but if I had to guess, I would say the snacks are the strong one, the cereal is the weak one. If I had to guess,
cereal's always weak. Me too, but the fact that was spun off, right? They just took the cereal. Makes me think maybe it's the cereal. I don't know, but interesting. Okay, and I see DHR and Aramark too.
DHR is spinning off its environmental unit. So if you own,
So is this Danaher?
Yeah, Danaher, and then the spinoff is the ticker is VLTO. So, by the way, if you own these stocks that are doing spinoffs, you get the new company as well. Usually it's a 1-to-1 thing. Sometimes it's not. And then the other one we had was where was it? I had it.
ARMK.
Yeah, but what would I do with the?
You're spinning off Vestas.
What did I do with the information that I had? I had all this written down, and where'd it go? Yeah, so Aramark is spinning off its like uniform, like work uniform business.
Yeah.
So
they do like corporate cafeterias and stuff.
Yes,
right?
Yes. So that again, if you wake up and you see Aramark down 27%, no, it's not.
Do they own Sodexo? I'm a big Sodexo guy. Who owns Sodexo?
What is Sodexo?
I don't know. They've just done like all of the corporate, and even like at Fairfield U, they do that dining hall. Is Sodexo?
Oh, I've heard of that. Okay.
And it's a French company. All right, serving restaurants, schools, and hospitals. Okay, yeah. All right, I think it's private. Cool.
Good for them. So that's it for spinoffs are concerned. We had a bankruptcy over the weekend. Smile Direct Club, which like good riddance, honestly. They
wait. Where'd they go? I saw their name in here. What happened there?
Chapter 11, voluntary Chapter 11. I guess it's
Smile Direct Club. So the company that says that they'll fix your teeth through the mail, but then can't fix your teeth because these things are just such a disaster. We've been hearing about how bad this product is for 4 or 5 years now. Finally went bankrupt. See, these things take time. This was a popular short story. As soon as they came public,
they opened. I think it was a direct listing. I could be wrong. And they opened below their. No, it wasn't. It may have been a regular IPO. They opened below their IPO price, which you almost never see, by the way.
Listen,
so that was fun.
Investing is hard when you find a company that has a great product or service. Investing is hard. Don't waste your time. Like it's impossible when you're trying to make money off of a company that literally offers garbage, right? Like at least start somewhere with like a quality product or service, right? That could be like all the fundamental analysis you do. Like, hey, Apple, good company. They make good stuff. Maybe I'll invest in them, right? Like give yourself at least that basic filter of, is this company even worth my time and energy, right? If the product or the service is trash, there's just nothing to do there. Like I said, investing is hard enough when you find a company that has a great product or service. So
when I lived in Michigan, I lived kind of like next door to an office park, and there was a big Smile Direct Club office there, and I used to go for like walks and runs and stuff, and I never. Maybe they're all remote. I'm assuming they must have been all remote because I never saw anybody there.
Yeah.
But they had this beautiful whatever. Anyway,
Give me the Arch Coal. Let's go to the Arch Coal from here. Slide 1. We talk about coal stocks a lot when they're doing great, right? They're up almost every day, and we come on here and say, "Hey, look at these awesome coal stocks. They're up." Arch is down 8% today
because of guidance.
Yep. So they provide an update on their third quarter results. Companies will do this, right? They'll come out, especially businesses like these. They're heavily cyclical and strange. Analysts have no idea, right? So the company has to come out and say, "Hey, guys, here's where we're at," right? In between earnings reports, every 3 months isn't enough for some of these companies. So they came out. They provide an update on their third quarter 2023 results, which, like I said, are not out yet and won't be out until, let's see when. So we'll get the third quarter numbers out
Probably
here.
a couple weeks.
Oh, God, I don't have it on my chart right now. Hold on.
Here. It's probably middle, end of the month.
October 24th.
There you go.
So gapping lower here, almost 10%. Right? Looked like that. If you throw up the chart, really looked like this nice consolidation up here off of that monster uptrend off the COVID lows. Looked like we were ready to go. Now kind of back in the box. So wait for confirmation. This trend was incredibly extended. RSI last week was up around 85. Don't see that too often. And now out here this morning having its worst day in over a year, right? So certainly stands out and something to watch. I'll be watching the rest of the coal group very closely here today, but all indications are so far that this is an isolated incident. I don't see much sympathy selling.
That's always a good sign.
Yeah.
When you don't see it spread, right?
Like Arch is down 10%, and other than that, like these are high beta stocks, right? They move a lot. So down 2% for these other names, not much, right? That's a pretty standard pullback considering the gains of the past several weeks for these names. So.
I'll be watching crypto today. Headline over the weekend from Coinbase. They got approval for a payment institution license in Singapore. Strazza.
Aha!
So
Singapore is the hub, dude. Singapore is the hub. That makes sense.
Coin, Mara, Riot, all leading my up filters this morning.
Yeah. Listen, Coinbase is the best one there. I think Coinbase is going to be all right as long as crypto is still a thing that people even talk about in the future. They're going to figure out how to be at the forefront of it. Some of these other ones like Riot, Mara, love them for trades, love them for the juice. But again, super levered to just the price of one crypto. Yeah, it's the best one. But if we're ever in an environment where you don't want Bitcoin and you want the other ones, those are going to be the last crypto stocks you want to own, right?
That's true.
Right? So like it worked for the miners this year, Spencer, because the rest of the crypto space wasn't working and Bitcoin was going crazy. That's why these miners were such great trading vehicles, right? They're tripling, doubling, quadrupling. If we're in a reverse situation where it's Bitcoin that you don't want, we won't be talking about.
Wait, but have we ever been in a situation where? Yes, we've been in situations where other cryptos where the alts have outperformed, but has there been a scenario where the alts have done well and Bitcoin hasn't?
Not for a sustainable period,
right?
No.
So
trend together, but correlate. These relationships can dislocate and change over time. So I'm just something to think about. Again, you're right.
Also, it's a new month, so you'll probably get a new quarter. So you'll probably get today or tomorrow. Marathon and Riot dropping their Bitcoin mining stats for the quarter. I saw one this morning from I think Bitfarms.
I still own a lot of Coinbase. I was in both Coinbase and Hood since summer of last year. Started getting involved in these. Neither trades worked great. I significantly reduced my coin earlier this year. We had like target hit. You see that red arrow up there around 100. But now I'm back in a little bit, and I'm completely out of Robinhood. I think Robinhood is a problem stock. I think
it stopped going down, sort of.
So did you hear the news today for them?
Robinhood?
Yeah, they're not like an operator. Like Coinbase is such a savvy operator.
Oh my God! Friday after the close, I'm just seeing this.
Yeah.
Oh man, no, they had to restate a filing. Oh no.
Yeah, I just lost it. I had it on my feed here, and now it's gone. Can you read it? They had like 100. They're estimating like 100 million in fines or something. Coinbase is out here. They're so transparent about what's going on. They're fighting with the SEC. They're always like they're on top of these regulatory things. Robinhood, this is a joke. This is bad form.
Okay, yeah, there's 100. So they're working to resolve this legal thing, as most recently disclosed in its recent 10Q. They have this expense of $100 million. That expense was not included in their 2023 GAAP OPEX outlook that was filed 2 months ago. So basically, they just said, "Hey, by the way, there's $100 million legal thing we got going on that we didn't mention in our most recent filing, so we're gonna say it now." So yeah, okay. I mean, that's not the worst thing in the world. It's not like they don't have to restate anything. But like, by the way, we have this $100 million legal expense.
There's no reason to miss that, right? Like that was a known thing that should have been at least disclosed in footnotes or something somewhere.
Yeah. I mean, it's definitely not great. Definitely not great.
When you're, I think it's a lesson. When you're getting involved in these speculative startup growthy companies, I can't tell you enough how important just a solid management team is, right? It's not just about the cap table. You always want to make sure that's squared away. And there's no issues there. But you want like a good manager. You want like a founder who's running it or something. Like, you got to be careful because some of these companies, they're bleeding cash. And then you look at like the comp and the bonus structures, and it's just a mess. So never underestimate the power of just a solid management team, particularly when you're investing in these startups and these more speculative names.
Yep, that's the truth. And unfortunately, that is one of the hardest things to know until it's too late.
This Vlad guy sucks. This tennis. You ever hear an interview with him? You're just like,
dude, lots of CEOs are socially awkward, and interviews are hard, man.
No, he's terrible. Listen, all I'll say is there's a big difference between a guy like Vlad Tenev and Brian Armstrong. Go listen to an interview with each of them. It's clear as day. You're going to say, I want to give my money to one of these guys and definitely not the other one.
I think interviewing is a skill. Or being interviewed is a skill. Some have it, some don't. Brian Armstrong has it. Brian Chesky has it as well from Airbnb.
Yeah,
Vlad from Robinhood doesn't seem to have that skill. It doesn't make him a bad guy or anything. It just makes him not good at
guy, Dara, money.
Oh, Dara was like made in a lab, I think.
Dude, so good. Love him. They've done such a magnificent job. Vlad looks like a creep too. I can't look at him for too long.
Oh my goodness! All right, whatever.
Bearish.
Bearish because of the CEO's hair. All right,
it's the mustache. It's this little thing. That's the creepy part. Anyway,
all right. We have Sean McLaughlin here. He'll come on in a couple minutes. Talk about option stuff.
Shawnee's been making it rain out there, huh?
We'll find out. Let me go through my list here. Oh, the other thing I had was Bill Ackman's got a new vehicle.
He's another one.
This is interesting. So, it's not a SPAC; it's a Spark. SPARC. It's a SPAC, but I guess you have rights to. After a deal, a target's announced, you get 20 days to exercise or sell your rights, which are traded on an over-the-counter market. Okay.
Please, nobody do this.
An OTC market. I love those, right? Oh boy, fun stuff. Anyway,
here's the thing with a guy like Ackman. Okay, he maybe owns like 15 stocks. Okay, very long term, builds big positions, holds them almost forever, usually too long. Just look at his filings. He's one of the guys that you can literally easily follow through his filings. If you want Bill Ackman's fund, right, and you want to hold what he's holding in his portfolio, there's a way to do that pretty closely. which you can't do with other fund managers. So if you're just itching to get that Ackman exposure, look at the 13Fs. Like, he's owned the same stuff forever, and half of it doesn't ever work.
Also, most of Pershing Square is his money. By the way, it's not outside; it's his own money.
Guess what? He's not unique in that way. The best hedge fund managers do that. Steve Cohen refuses to ever not own the majority interest in his fund. It's like 60% always. That's why it won't grow. Ray Dalio isn't that way. That's why he's got $100 billion, because 90% of it isn't his. 95% of it isn't his. Steve only maybe has 10, 15 billion. More than half of it is his money. So different strokes for different folks. They're all talking, and it is exhausting. Ray Dalio was on. I had to. Oh my God! It's always like an end of the world. China, this like I can't.
Well, What?
Here's
the thing about my take about all these guys, Ackman, all of them, is like they're not on your team or my team. They're on their team, right? Like they're looking out for their interests, not necessarily my interest or your interest or anyone else's. So
is Dalio one of those guys who's like too smart for his own good? It's because the issues and the things they talk about, sometimes it's like, this doesn't matter for 99.9% of people. Also, another important thing is these hedge fund managers, they're running their portfolios in a very different way, and in a way that most people don't need, right? Like, if you go to some of the best investment advisors in the world, they'll tell you, like, investing doesn't have to be that hard, right? You can just do a long-term trend following type of strategy. Meb alluded to some really good long-term strategies. That interview was great Friday. Go check it out. But he basically has quality filters, fundamental filters, then overlays a trend following component. Like, this is all, like, there are ways to invest for the long run and not need to be a hedge fund, right? The other thing that I thought was interesting, this Delivering Alpha conference just gets worse and worse and worse. It's almost like page 6 of the New York Post at this point. So Wapner's up there with Ackman last week, just baiting him to say mean things about Carl Icahn. And it's like, I thought this ended like 12 years ago. And he took the bait. He took the bait. He starts talking crap about. What I will say is he backed off for like 10 years. Carl got the best of Ackman back in the day. Big time, right? Ackman backed off, like, made friends with him. Now that Carl's struggling again, now Bill Ackman wants to come out and start talking shit again. These guys are.
Well, the thing is, there was a period of time after I guess the .com bubble from like 03 or 02, 03 to like, I don't know, 2013 or 15, where like hedge fund managers were the stars. The stars, right? But they're not really the stars anymore. Right?
Dude, it has changed so much, Spencer. When I was in college, and it wasn't that long ago, I was in the business school, and everybody wanted to work for a hedge fund. Like, I get it. I was in Connecticut, so that was the thing. But it was like, you talk to anybody, I want to work for a hedge fund. I want to work for a hedge fund. Like, that was the cool thing to do. By the time I was done with like my master's and my brother was in school, like, hedge fund,
private equity, baby. Let's go. Let's go.
No, it was Valley stuff even more, right? It was like tech or Silicon Valley or PE venture, right? But like, hedge funds was like a bad word. It's like, you want to work for hedge fund? You work for hedge funds? I was like, I thought it was cool. It's not cool to work for hedge funds anymore. Like,
it's not cool.
Changed very quickly.
All right. Well, let's bring on Sean here. Before we do that, quick look at the market. Very mixed today. Obviously, like we said, a big crypto trading higher, leading the way.
Yeah.
Crude down. S&P's unch on the S&P futures. Plus, we got sectors very mixed. TLT down about 88 basis points. I just said that. Wow.
We're going to talk about it. I'm going to pull up some short-term charts. Get Shawnee on here. Talk to him for a little bit. Give me a few minutes. I'm going to put together, because we talked about these tops, right? We talked about how important last week's close was. Do you remember me being obnoxious?
Yeah.
Makes fun of me. Oh, the way we close this week is going to be important. It's important every week. I thought it was extra important last week, right? Because we had that multi-month breakdown, right? We hit these new multi-month lows. We had these short-term tops. Looked like they were printing. Really looked like they were completing. Then we got no follow-through, and it looked like we were hooking higher, and we were going to scoop and score. And then the bears came out and just buried the markets Friday afternoon.
This week is big too, because we get a lot of information this week. That's what people like to say, right? We're getting a lot of information this week.
Can you run down what's the big ED this week?
Oh man, we were supposed to get nothing because of the government shutdown. Can you imagine? But no, we have a jobs number on Friday, so
and that's it.
Yeah, no, there's more, but that's the big one. All right,
there's no inflation stuff this week though. The inflation stuff, just different, right? We always talk about how different environments call for different tools, and I wish John Netto was here right now, right? Because that's true for the macro too, right? Where depending on like the current narrative or the expectations of the market or where the market sees things going, because we know where the market sees things going. We can use things like Fed futures, right, to determine what the market thinks the Fed's going to do and where the bond market's going to be a year out from now. So you want to be aware of what that macro picture is. And then there's different economic data reports that will matter more or less in different periods. Right now, inflation is everything, right? Because if these inflation numbers keep coming in low, then the market's going to be like, okay, we're done. No more hikes. Absolutely not, right? And they're going to make that call. If inflation starts ticking higher, things get a little strange here, a little bit weird, right? So that's the big report, the CPI and the PCE. That's what everybody's watching these days.
Yeah, and we don't have that this week. All right, let's get Sean on and see what he's doing this morning. Sean, you ready? I hope so.
What if I said I wasn't ready?
Sean, that would have been funny. I have to apologize. I guess I'm not apologizing, but sadly for you, JC is not here for you to rub his face.
What would we possibly have to talk about?
I'm honestly not sure.
Yeah, me neither. I have no idea. We don't need that guy.
Okay.
Hey, I just want you to know, Spencer, that I'm on your team. I'm on the Spencer team.
What'd I do?
You were talking earlier about all these hedge funds that they're all on their own team. They play for their own team. I'm on your team.
Oh, thank you.
I'm on Team Ackman.
Appreciate that.
You're on Team Ackman? Of course you are.
Oh, man.
No, but congratulations, Sean. Can we talk about it? I mean, that was just.
What do you want to talk about?
My dad texted me yesterday during the game.
know.
He goes, they just can't figure the Bills out. This is crazy. And it seems like, man, I don't know if I've seen a team have another good team's number like this in recent years.
Listen, I know the people want me to come in here and talk shit about the Dolphins,
Do it.
but I'm not going to do that because
I'm
look,
giving you the platform.
yeah, no, look, there's nothing wrong with the Dolphins. The Dolphins are just fine. Can't we just accept that the Bills might be better? Can't we just say that?
Much better.
No, but Sean, can you also agree that it's like a very, very long season? Because it wasn't the sentiment after week 2, like, do the Bills suck after week 2? Or
yeah, as we get further distance from that week 1, which was an awful showing from my Buffalo Bills.
Right.
As we get away from that, my feeling is that, you know what? The Bills just weren't done with preseason yet. They just needed one more preseason game, and they got it in New York, and now they're firing on all cylinders.
But listen, guys, I know it's easy to make fun of the Jets, but they're not bad. They played well last night.
Hey, man, they fought hard last night. I was watching that game, man. They gave Kansas City a run for the money. That was great.
Yeah. Oh, all right. Going to be a fun season. Go Giants. Big game tonight.
I mean, I think we can all agree that the AFC East is the best division in the NFL right now. Can we agree on that?
Yeah. Yep.
Well, there's 2.5 good teams, so yeah.
NFC East isn't bad either, but we'll see how it all shakes out. But Eagles and Cowboys look ridiculously strong again this year.
All right, Sean, what are you?
All right, let's talk business here. I know that JC in particular and Strazza too both get very excited when a month ends and you guys have your monthly candles, and that's like that's your big geek out day of the month. In my world, in the options world, it's not as exciting, but still equally important. As an options swing trader, someone who puts on trades that I hold for weeks and months at a time, when the calendar turns to the beginning of the month, that's when I have to take aggressive action on any positions that I still have on that are expiring in this month. So as we come into October, I've got 5-6 positions on that have October expiration, and now I need to start making some decisions. In my case, what I tend to do is if it's a trade that's winning, I want to keep winning. I want to keep holding it. I want to let it keep working as long as it will work, but I will more aggressively trail stops on positions heading into expiration. And for me, I don't have a hard rule on where I place a stop, but I tend to do a 3 to 5 day low, like a trailing stop on a 3 to 5 day low on positions that are working. TAL is one we're in right now. I know Strazza likes that one, TAL. We've been in that one for a while. It expires this month, and it's running right now, which is great. I wish I would have done it earlier, but it's working for us, and it's getting close to a key level that we were going to take some profits at $10. But that's one where I'm aggressively trailing a stop now for the rest of this, or at least for the next 2 weeks.
So, like right now, that would be what, like Wednesdays, like something on Wednesday.
I don't have the chart up in front of me, but let me hold on.
Like call it $8. I don't know.
My stop now currently is at 8:15, which is the low on the 27th. I think that's Wednesday. I think you're correct. Yeah. No, Tuesday. Tuesday's low.
No.
I forget what day of the week that was, but whatever the day was, the 26th. No, sorry, 27th. The low of the day on the 27th. That's my current stop. Now, tomorrow, I'm probably going to raise my stop even higher, probably move it up to about 870. Again, I want to be aggressive because we're running out of time. Options expiration in October is the 15th. So we've got, yeah, so we've got 3 weeks, 2 weeks to go.
Is it really?
Yeah. So that's what I'm doing with Tal. Now, on the flip side, on positions that aren't working, like let's say if I have long calls, let's just keep it simple. If I have long calls and they're out of the money on the first day of the month, for me that's a no-brainer. That's a cut and run. That's a get out, because at that point, if you're holding position that is out of the money in options, now you've got theta drag working hard against you. That means that the daily decay and whatever premium is left in those options is going to start more aggressively decaying away as we get closer and closer to expiration. So any options that I have now that expire in October and are out of the money, they are gone. I'm getting rid of them today, and there's a few of those that I have that I need to work on. So that's the excitement that I have. On the first of the month. It's not as exciting as JC's monthly candles. I know he gets very excited about
Sean,
that.
The third Friday is the 20th in October.
Okay. You know what? You are correct. The 20th is expiration day. Okay. Sorry.
Yeah. I was gonna say, the 15th. I think last month it was the 15th, I think. Because the first
sounds right.
It was.
Maybe that's why I've got 15th in my head. But yeah, the 20th. You're correct. Thank you. Okay. Either way, we're still in the expiration month. That's when I start taking action. It's like a blunt instrument rule, right? Like I don't have like a hard 21 days is when I take action, or 15 days. No, it's just once we get into the month, once the month starts, that's an easy heuristic for me to use, and that's when I start getting aggressive.
But you'll spend the next few days just sort of manually moving up stops. Is that it? Or down?
That's what I'll do every day, every morning before the market opens. I'll look at my charts, and it's not like there's a lot of positions. I think I have 4 positions on that I need to pay close attention to. So every morning I'll look at the chart and see if I need to raise my stop up, and I'll do that. And eventually, it's rare that I'll hold a position all the way into expiration day. When that does happen, that means it's been working, and that's great. And that has happened a few times. But I'll probably be out long before expiration, and so. Maybe I have to do this for the next week or so. We'll see.
Cool. And at the same time, of course, you're looking for new trades, right? Always.
Oh, of course.
Yeah,
of course.
Of course. That goes.
I'm waiting on Strazza to give me some hot ideas that I can put some options trade on.
Well,
yes, I think we're getting. Listen, again, we gotta make this scoop and score a valid one first, but there should be plenty good trading opportunities if this is a tradable low. Next stocks.
Well, I'm a total broken record for anyone who's been listening to me for the last month. But unless a really great long setup reveals itself to me, my default mode right now is just looking for premium selling, and that's going to continue to be the case until we get some resolution here in the market.
That's right. Let me take this question from the chat because it's a really good one. Hey, Steve, what 5-day moving average would I use on a 39-minute chart? Let's walk through the answer to that question, right? Because there's some really simple math behind it that Brian, I think, explained really quickly during the interview. So a 39-minute chart, how many minutes are in a day? 390 minutes. 390 minutes divided by your 39-minute candles, it's going to give you 10 equal periods. If you want a 5-day moving average, you have 10 periods a day. 10 times 5, 50 would be the period that you want to use. That'll give you a 5-day moving average on a 39-minute chart. Right?
And that is math with Steve Strazza. Well done, buddy.
That's Brian Shannon math right there.
Yeah. Hey, well, while we're answering questions in the chat, T Money had a question here. He wants to know: do I put a stop loss on as soon as I open an options position, or do I let it ride until the month of expiration? That's a good question, T Money. And the answer is yes. I have a stop loss. I don't want to say 100% of the time because that wouldn't be true, but let's say 99% of the time. Whenever I put a trade on, I have a chart level where that's my risk management level. Yeah. You might call it a stop loss level. I call it a risk management level because I don't put out a resting stop loss order in options. That's a bad idea in any options market. Most options markets, if you have a stop loss order working, you're going to get a terrible fill when that gets triggered. That the bid-ask spreads are too wide. You always want to try to work out getting out of a trade with a limit order in the middle of the bid-ask spread, whether it's a single option or a spread. You never want to do stop loss. So I don't put an actual stop loss order out, but I do use a key level on a chart. And if that level is broken, if the stock closes below that level, then I will exit the trade on the next trading day. Most of the options trades I put on have defined risk, so it's not like I need to worry about intraday noise and really panic if a stop loss gets triggered. But yeah, I do have a stop loss in mind in every trade that I put on T-Money.
You become a price taker, right, for your options. So what Sean's saying is the way to manage risk is by analyzing the price chart of the underlying asset, right? And then you're going to go to your options account and you're going to take whatever your contract is trading for at that moment, right? And you don't know what it's going to be.
And to expand on that, one thing that gives me the peace of mind of being a price taker, as Strazza explained, is that it all starts in the beginning. When I put the trade on day one, when I enter the trade, I've sized that position, especially if it's a defined risk trade. I've defined the position in such a way that if I were to lose 100% of my invested capital on the trade, that's fine. That's, it's a 1% hit to my total portfolio. I could come back from that. It's no big deal. Yeah. I take 1% losses all the time. So the fact that I have that working for me in the background means I never have a panic exit, right? I'm never freaking out if a stock gets below my level, if a stock has a huge gap that I wasn't accounting for. It's never a panic mode. And that's a superpower, guys. You can't really necessarily do that if you're a stock trader or a futures trader. You can put stop loss orders out there, but if you have a gap that goes through your level overnight, nothing you can do. You're going to get waxed. But with options trading, when you can define your risk, that's a superpower that people don't take enough advantage of, I don't think.
I was tempted to make a joke, but this has been such a great discussion. I was trying to keep it serious, but I always have a stop loss on my options. Most of the time, it's just zero.
Well, you're making a joke, but that's a real thing. I mean, that's one of the great features about option trading, especially if you're a buyer of options, is that with absolute certainty the most you can lose. Now, maybe you're trading too big and you don't want to lose that much, and that's a different problem that you need to address personally. But when you put an option trade on, when you're buying a long option or a long spread, your worst case scenario. And as long as you're comfortable with that worst case scenario, then you've got nothing to worry about. Just let the trade work.
Recess, run the bumper. We got 2 minutes.
Yeah, real fast. Before, I just saw a headline. Liberty Media Formula One, like that company, proposed a merger with SiriusXM today.
They've been involved for a long time.
Oh, have they? I didn't know that. Sorry, I'm just seeing that now. Okay.
Liberty Media, is that the stock that has like 17 letters in its ticker symbol?
16 actually, but yes.
And like 10 different publicly traded companies.
That's different. Fine, never mind. I didn't know they were involved. Okay, recess.
That's Malone stuff. He owns a lot of media.
That's true. He does. Okay.
He's good. All right, I'm going to go first and keep it real short. The Ryder Cup, you guys already know how I feel. It is the most underrated sporting event in the history of sports. Nobody talks about it. I mean, this thing is absolutely electric. If you haven't seen it, you got to check out the highlights. It's at the level of like nationalism and patriotism going in. Like these guys are just fired up. They're at each other's throats. Like Spencer and I were talking about, they're fighting out there, arguing over like, sportsmanship, and you're standing in my line. Like they get really, really into it, especially if you're somebody who enjoys like watching the Olympics. It's the same feel. You get 3 days of it. And these guys are out there crying. The emotions are just running high. Fans are going crazy. Guys are jumping into ponds. It was a lot of fun.
Is this like the World Cup of soccer or the World Cup of golf? Excuse me.
It is such a fun event. It is such a good event, man.
Yeah. This is sad, but I'm a total bandwagoner when it comes to watching golf on TV. You know, I grew up at a time when Tiger Woods is my age, right? So I grew up with Tiger, and whenever Tiger was on TV, I would watch. But now that Tiger's not involved, I'm less interested. But I don't know if that says
a lot of people feel that way. Like, you know, you hear this about the NBA. It's not the same anymore. Same thing about golf. It's not the same without Tiger and Mickelson and all those guys. Problem.
All right, my recess is I'm going to recommend a book that I actually haven't read yet, but I read an excerpt over the weekend, and it was captured by this. I read a 10-page excerpt, and it was.
You're gonna suggest that we all read a book that you're planning to read.
Yeah, but exactly. Number Go Up by Zeke Fox about sort of the rise and collapse of the most recent crypto bubble.
That's a great title.
Number Go Up.
Good. Yeah.
If I ever do a book on charting, it's going to be Line Go Up.
Yeah. So again, I've not read this book, but I read an excerpt and I was mesmerized. It was really, really well written and really, really interesting. So there's a lot in there about FTX, but not just about FTX. It's about crypto as a whole.
Right.
You know, Doge is in there. Lots of stuff's in there. Anyway, that's my research. Also, if you haven't seen it, we uploaded the Ari Wald segment of the Chart Summit to our YouTube channel. So if you go to our channel, Stock Market Media on YouTube, and Ari Wald's video is there from last week. So check that out. If you want to get all of the stuff from the Chart Summit last week, you have to go to chartsummit.com and register for free there. But Ari Wald is on YouTube for your viewing pleasure. Thanks to our guest today, Brian Shannon. Thanks to Sean. Thanks to Kimmy. Thanks to Steve. Thanks to you in the chat. Everyone, these guys, by the way, Sean and Steve will be live.
No. Announcement. Sorry. No flow show today. I got
no flow show?
Yeah, sorry. Guys.
Oh, breaking news.
Yeah, no flow.
Breaking hearts everywhere.
Wait, why?
Maybe we could do it. Maybe we could do it in the afternoon. I got DMV, Town Hall. It's a whole thing.
All right, it's a whole thing.
Breaking hearts everywhere,
All right, maybe a flow show later on in the day. I don't know. Stay tuned for that, I guess.
We'll figure it out. Maybe
right.
afternoon. I don't know.
See you later, guys.
Bye.
Yeah.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off.